Welcome back everybody, Sive Morten here with the Forex Peace Army.com, and as usual, let's take a look on the gold market. So here's actually two moments. First, as we already talked about this in today's video on the Forex market, it's common meeting in Alaska keep all markets in tension, just because who knows what agreements will be achieved there. Although personally I have some skeptics on this meeting and suppose that hardly we will get any breakthrough in the relationships Russia and the United States, but this is really a situation that makes investors nervous, because if really the breakthrough will be achieved, that could change everything actually in the geopolitics. That could change the position of the Donald Trump, its role in the global affairs, position inside of the United States. It will increase the authority of the United States dollar, and the major losers will be definitely European Union in this situation, because obviously the topic of the Ukraine will be touched in some way, and we know that the positions are diametrically different of the United States and European Union concerning the conflict. So it's really the topic that keeps everything in tension, and that makes investors to slowly take some positions, be prepared for possible outcomes. So, and you can see that not only demand for United States dollar, but United States long-term yields also start moving lower, indicating that some preparation and the demand for the safe haven. That makes pressure on the gold as well, because in the case of some agreement, the big part of the geopolitical uncertainty will be eliminated, and that's probably will trigger significant retracement on the gold as well. That explains the recent performance. Although we talked about the possible deeper action on the gold market last week, starting from Wednesday, but of course, where we based our suggestion on some technical issues, not some announce of this meeting in Alaska that actually has happened on Friday. But anyway, our result mostly the same. So that's what's about the background that we have. Also, don't forget about the CPI report this week. It also might make some chaos in the performance. So what are we going to do in the current circumstances? Overall context on the gold market, longer term context, still remains bullish. And until market stands in a big weekly wedge pattern, the recent drop is not actually hurt in any way to the bullish background. For a gold market, its major task is to stay inside of this big pennant consolidation that you have on the weekly chart. Only if market will drop somewhere below 32.50, maybe 32.20, and drop here out of the pennant, that could bring some reasons to be worried about the further perspective, and that could trigger the deeper retracement, which we actually said that if it will happen, that might be also a great trade, because we have a good thrust. It might be a bread and butter buy or something. So let's not talk about this right now, but currently we could say that in general the bullish background on the weekly chart is still valid. So still on the daily chart, market could keep going lower, especially based on this tail close on yesterday, when the market understand that Donald Trump is not joked about the possible meeting with Putin. And you can see this was significant downward drop where it actually engulfs the whole previous trading week. It's important, and this good impulse for intraday trade, suggesting that gold easily could keep going lower. The one thing that to keep an eye on today is a potential bullish grabber. Chances for that, at least by some reasons, if we take the reasonable view, chances for appearing of the bullish grabber here are not too much, right? Taking in consideration of the whole background. But technically it is possible, and I just mentioned it just to keep in mind this possibility and see what will happen tomorrow with this performance. Besides, on the follow time frame chart, you can see market stands precisely at the support, not on the follow time frame chart, on the hourly chart. Market stands precisely on the confluence area that I have mentioned previously, 33.40, 33.54. So that's confluence. We initially thought to consider taking long position when no meeting was announced yet. Now you can see on the follow time frame chart, market dropped out on the flag consolidation. It's also bearish. Divergence, by the way, has worked just perfect. We do not need it anymore. And here we have to pay attention to the price shape that we have on the hourly chart. Initially, it could be suggested that might be some double repo buy, but currently it's obviously not. more probable that we will get downside continuation, because market here definitely takes the shape of some pennant. We have also bearish dynamic pressure. Take a look, trend turns bullish, but price action is not. It suggests that probably we could get another drop here, somewhere to the 33.20. It will be next destination point. So in current circumstances, if you would like to take the long position on the gold market, I wouldn't hurry up. Actually, here we could make the same advice as on euro currency. There is very similar situation. Just keep watching. So because overall bullish context on the high time frame still valid, we just need to watch for big support levels and see how market will perform there. If by some reasons we will see the drop below the lows of the payrolls report, this market will just erase this rally. That will be the worrying sign, because in this case, big chances that we could get some deeper ABC retracement below these lows and drop out of the weekly pennant will increase significantly. So while market stands somewhere inside of this range, this level 618 support, flirting here, overall bullish context and midterm will remain. So that's actually what we have on the gold market. Let's keep watching, but I'm just have to warn you in advance that this meeting that will happen only on Friday, and results probably will be published in the weekend as usual. So probably will keep all markets in tension for a whole week. So trading process this week definitely will be really tough and difficult. That's all for now. We'll see you tomorrow.